All right. Good evening. Good evening. This is another episode of Mr. Bilbo's Crypto Neighborhood. I want to thank everybody who came out and showed up tonight. Um, Tonight, our subject is one that I'm very passionate about. I think I really realized or figured out like this is the way to financial freedom. Um, and I don't think enough people understand this about money or how to do this in money or different ways to do it. So it's my hope to help as much as possible to push this message out here and let it be known this is the way that you can get to financial freedom. So Albert Einstein says compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. So just wanted to start off with that because there, especially in this crypto space, there is a ton of new applications with this DeFi that we're able to tap into when it comes to creating passive income or making our money work for us. And I think that's what we need to be focused on. Making what we have grow. That's the goal. So two platforms that I want to pay attention to today. I want to go over it. The first one is the Drip Network. So again, this is a platform that I've been a part of since January 18th. So far I started with like $750, and then so far my total balance have gotten up to 1,600, but the coin is down a little bit today or over the last past week, so I'm probably at about $1,400. So a little bit over a double of my money or my deposit within less than 30 days, which is great. And the thing about Drip is that they pay you 1% on that deposit. So the first deposit you make, that's your receipt of deposit, and then you'll make 1% daily on that Drip. So part of the way that I got to where I am now is that I compounded. So the 1% that I was getting every day. So they have the swap, and I'll go back and talk over that. But they have the swap where you can go, and this is where you can buy a Drip. You use BNB to buy the Drip, and then you can deposit that into the faucet. And then you can either deposit that into the faucet or the reservoir. The faucet is what I'm in currently. And what the faucet does, the faucet allows you to make up 1% daily returns on an investment up to 365%. And that's annual over the life of the you having your money working, right? So that's 365 days in a year. You're making 1% a day, so that's 365%, right? But that's just the flat rate of annual return. That doesn't account for the compound in what you're doing. So what I want to do, I want to take a initial investment of say $1,000, and then we'll go and look at what that would be compounded over a week, over six. No, I'm sorry, over a month, over 6 months, and then over a year. So you can really see the benefit of what compounding does. And on platforms like these, again, this is not financial advice. These all come with their own certain amount of risk. But I've done some research on this particular one, and also I encourage you to go out and do the same thing. They do AMAs. They have a Telegram group. Always get into these communities. Always see what's going on. See what the gist of how people are feeling, what people are saying about it, and then who are the founders and backers behind the platform. That'll give you a lot of information of is this a great project or should I put my money here or not, right? But again, never invest in anything that you cannot lose completely, right? That is always the golden rule. So with this one, like I said, for this one, you I think the minimum right now, I think Drip is like look, we can go see how much it is right now. How much is Drip? And this Drip network, you can go to Coin Market Cap. It's Drip network, so it's down right now. But Drip is $102. When I got in, it was $87. So it's been down. The whole market's been down. In the last 24 hours, they did a million bucks in volume, and then they have a 10.2 million dollar market cap. Okay, and this platform has been going for uh almost 9 to 10 months now. And then you can go here and look at the BNC scan and actually look at the contract. And you see right now they have 71,762 addresses. So holders of DRIP tokens. So it's 70,000, 71,000 people out there who actually hold this actual token. So like I said, when I got in, it was about 102, right? So it's going up and down, it's fluctuating. But the thing about it is you're compounding on your initial investment, right? So with DRIP, what do I want to do? So okay, so right now I have about, say, call it like 13 or 14 DRIP or whatever the case is, and you just time that times the actual amount per coin. So again, these are our price predictions. Who knows what they'll do or whatever. But I know since I got in, it went from $67 to $169. We've had a retracement. So I already know that I at least have an all-time high of $169 that I can look towards if it gets back up there. But they have predictions on this that it might hit $1,000 per coin. So say if you got 13 coins like I do right now, that's 13,000, and that I'm getting from compounding, but also the appreciation of the coin. And then then I'll make 1% of that. So if say if we do hit $1,000, each one of my DRIP, that'll be 13 grand. So that means I'll be making 1% of that per day. So that's $130 a day, which is amazing. Like if you're making $100 a day, that's $700 a week, $2,800 a month. And if you can do that on autopilot, I know a lot of people, that would help a lot of people's homes, right? So I just want to go to this Google. I want to go to this, where's my calculator at? Let me get to my calculator. So it's compound interest calculator, okay? So let's just look at it. We can start with what I started with. So I'll start with $750, the interest rate at 1%, and then that's being compounded daily, right? So over a month, let's just say 1 month, and this is great. It'll calculate it for you because it does it on an annual basis. Then you calculate that. So over a month, you're looking at $228. $228.13 of earned interest over a month. So your $750 have turned into $978 in 30 days. That's an effective annual rate of 2,321,000%, right? So this is if you do nothing but compound every day. You put the 1% back every day. In 30 days, you will have interest of almost $230, almost $300, right? So, and again, with these, you have to have a strategy to say, okay, at some point, I'm gonna start taking money out so I can recoup my initial investment, and then after I get to a point where basically my initial investment is out, now I can stand to just let it ride and then still take profit along the way. So my strategy is pull out one day, compound one day, pull out one day, compound one day. So if you do that, then that's a strategy of taking profit and then also still building your nest egg. But let's say the same $750 that you have, you do it for 1 year. Do it for 1 year. Go down here, calculate that. All right, $750 in 1 year. If you just compound it every day, you'll be looking at a full investment of $18,157, right? So that is the power of compounding. Like again, they all carry risk, but I know a lot of us put our money in bank accounts, savings accounts, or whatever the case may be, that they're only going to give you 0.005 or whatever their rate is at the bank. And I think a lot of people don't don't do these type of platforms because one, they're not comfortable with them, they don't have knowledge of them, and they really don't have an understanding of what's being offered or what's available. So that's part of why I'm doing this, because I just want you to see the power of this. And then if you so that means it's out here. So yeah, you're gonna have some good ones, you're gonna have some bad ones, but this capability of compound interest on a daily basis is out here. And this is just at 1%, right? So I always go with this one because you want to have some conservative. You want to be conservative with some of the things you do, but then also, um, you want to you want to have a certain risk tolerance for other things. And again, that's totally um up to you and your risk management and your risk tolerance or whatever. But I always say you have to be diversified. You have to have more than one egg in not all your eggs in one basket, and being able to diversify. And I think this is a great way to do it. So they offer the fountain, but then they also offer the reservoir. This is another, and this is all in the same ecosystem, right? It's a guy named Forex Shark. That's the guy who's done these platforms. So he's been very successful in what he's done in the protocol that he's put together, and they've been sustainable. Some of these are not sustainable, but his platforms that he's putting together are sustainable so far that we've seen. So this is another contract that you could put in, and I think this one pays 2% daily on this one. So think about it. If you have a portion of your investment in the faucet that's paying you 1%, and then you have a portion of your investment in the reservoir that's paying you 2%. With these two investments, okay, that's two streams of income. That's diversifying 2 times. Now you're looking at about 3% daily on your investment, right? So that's what these provide. And then attached to this platform is also the animal farm. So this is the other platform that they are involved in. And I really like what he's doing with this, because one thing that people might not understand about like how value is achieved with these coins is the emission rate. Like how much coin or how much supply is going out into circulation and how fast, right? So I think one of the protocols that he's built inside of this ecosystem that he's built is like basically when demand is up, then this protocol that he has adds more liquidity or adds more supply to the ecosystem or in circulation. When demand is down, then it cuts back on the amount of coins that are going out in circulation. So it always keeps pace with the market is demanding, which I think is brilliant, because you'll see like some of these coins, they have the same rate of coins going into circulation, but then you'll have a dip in demand. So you'll just have more and more coins on the market that nobody's buying. And of course, what does that do? Less demand or more supply, less demand. That's again, the price decrease. So with this, it stays in line at I think it's 25% above peg or whatever their peg is, 25% above that, but it fluctuates to make sure that they're never over minting coins, and you can always depend on a steady rate of return. So I think that's great on what they've done with this platform. But see, like this, it'll show you if it's at the maximum, then it'll produce a certain amount of coins. If it's at the peg, it'll produce a certain amount of coin restricted, and then deflationary. It goes through all of these different levels based on the volume of demand. And I think that's brilliant. It's all done independently of any third party. That's the beautiful part about smart contracts and the blockchain, because all of this can be programmed. So you can tell they sit down, thought these things out. These are some people who know math, know banking, know how to do financial instruments and things like this. So they sat down and really thought this out, and then they wrote this code into their smart contract. So I think it looks pretty good from where I stand. And then you can look as far as their lock liquidity, because every token, their LP token that they give you, they always pair it with BUSD. So it becomes locked liquidity, because they're buying a solid stable coin with the LP token. right? So that gives you a stable amount of security inside of the platform. So they have about $300 million of locked liquidity, and then they give rewards, the rewards to pay back the 1% and everybody's that's staking inside of the vault. So one of these things, this is like their exchange. So if you ever been on like Pancake Swap, Sushi Swap, all of these have different formings. So again, this is another way of compound interest that people are really not aware of. Because again, we talked about the banks. The banks will give you 0.005% on your money in a year. But right here, if you look at the APR on these, 288%. Right, and it's backed by a stable. I mean, it's pegged to a stable coin, which gives you a little bit better security. You have this one 336% annually. Then you have this one with the drip. See, because they both tie into each other, right? So this one is 235%, right? So all of these are putting your money, taking the underlying asset without selling it and earning interest on it. And then they have where if you stake here, then you earn what is called pigs. Pigs is basically the governance token of this site. And basically, I would call it like an ownership stake. If you have the more pigs you have in this platform, that means the more ownership that you have of this platform. And then when you have more ownership, these rewards, these rewards that are being built up, that's who they pay those out to, just like you would if you were in a company and they were paying out a dividend. It's the same exact concept that they're doing with this platform. So they encourage you. This platform encourages staking, and a long-term perspective on this platform, on this project, instead of like a rug pull or a pump and dump. The incentive is to put your money, leave it here, and let it work over a period of time. So I think that's another way. Like you gotta pay attention to how platforms are being built, and what are their principles, and what are they being built. What are they trying to achieve with the platform? And I think they've done a great job in doing that. So they have, like I said, with this, you have the staking where you're earning pigs, and then if you go to the pig pen. The pig pen is right here is where you lock up your liquidity right here. And this is where you get the ownership of the actual platform and earn the rewards. Right now, it doesn't have the APR on this one. But I mean, last time I looked at it, it was like, I think it's like 2 to 3%. Right. So so again, we talked about two platforms. We talked about the drip, we talked about the faucet and the reservoir. So faucet 1%, reservoir is 2%, and then you go over to animal farm, and then you have your farms where you can stake it and earn these APYs on your money right here. And then you earn pigs to stake in the pig pen to earn another 2 to 3% on you. So if you're looking across this, you're earning anywhere from 3 to 5% daily on your money, just by having your diversification of your funds across these different platforms. So I think that's very powerful. I would suggest you can go to their website. It's theanimal.farm, and then read their white paper and actually see what they're talking about. See what the whole platform is doing, what the aim is, what they're looking to do. So that's what I wanted to talk about today with the compound interest, and introduce these two platforms to you. And then we can go over, look at the charts really quick. I was looking at ADA today. Man, the market has been down today. And I'll say this, I think we may see lower. I think we may see a $29,000 Bitcoin again. I think that's possible, right? The reason I say that is because I follow a guy. His name is Daniel with Chart Champions. Like I said, this guy is, if you're into trading, this guy is one of the best traders I've ever seen. He really talks about the psychology of trading. He has one of the biggest hearts that I've seen that you can see on YouTube or whatever the case is, but you can tell he's a real genuine guy. But when you talk about results, Like this man gets results on all of his trades. Like his whole group is amazing, right? So what he said, I would like, wouldn't you like to know when CC Pool stops dumping every rally? So CC Pool is what they call Chart Champions Pool. That's what they call themselves. But we will take BTC deeper than you ever could imagine. First Chart Champions are collectively doing billions in volume, trading 20 billion volume last 24 hours. Do the math. CC Pool controls 25% of the BTC volume. So the reason I say this and the reason I brought this up, because like I said, I've been watching this man trade. I saw him call the correction at 69,000 on a live stream 2 years prior to it happening. So when I say this man knows what he's talking about, he knows what he's talking about. So I think we could see a little bit lower in the market. So my advice always to that is, again, don't have a bias in which way the market is going up and down. We're looking for buys at the lows and we're looking to sell at the highs. That's what we're looking for. And we know once always follow Bitcoin, looking to see what it's doing, because it's going to move the market in some instances, because it's some other ones that we'll go through, like gaming, and some of the other ones are still doing numbers even in the downtrend. So, but normally the market runs off of Bitcoin. So we're looking for those lows for opportunities. But if you are trading, then I wouldn't trade against the market right now. I will wait till we find a bottom to get into positions, or we are trading, looking for retracements to go lower, in my opinion, right? But what he's talking about right here, if you look right here, Bitcoin in the last 24 hours did $24.7 billion in the last 24 hours. Ethereum did 15.6 billion. Tether did 56.9 billion. BNB did 1.9 billion. XRP. And this is what I always say. All you got to do is look at the money, follow the money, see where the volume is coming from. 3.3 billion, Cardano 1.9 billion, Solana 2 billion, Luna 2.3 billion, 1.3 billion for Avalanche, 4.7 billion, Binance, Doge, Polkadot did a billion, SHIB did 1.5 billion, Polygon 1.3. So always, like, look who's doing numbers. Look who's, like, even when the market is down, you want to be saying, where's the volume going? Where is it at? Bitcoin Cash 4.2 billion. So you always want to be paying attention to where the money is moving, because these are your indicators. And then another big indicator to always look at when you go on CoinMarketCap, always look at the market cap. So we're at 1.7 billion right now. We know we've reached about, I'm saying trillion, 1.7 trillion. We've reached around $2.1 trillion market cap. So we're down right now. We're still up. We're up 2% overall. But we've seen $2 trillion. So you always want to be looking at this. You want to be looking at the 24-hour, but this is the dominance that you want to be looking at, right? When Bitcoin dominance starts to go down, and these two come to around 70%, historically, it'll get down to, say, about 33, 30, 34%, somewhere around there. That's when it should be going on a run. And then people are going to start taking profit, and then alt season should be happening, right? And so when these flip, these are always indicators of where, like, who's holding what. So I would always be looking at this as a model of movement in the market. And so when this BTC dominance starts to drop, like, again, around 30% or so, then that's when you're going to see a real shift in the market. So just be paying attention to that. So that is all that I have for you today. So I'll stop my share.